Hello, Assalamu alaikum.
Assalamualaikum.
Walaikum salam. Yes, Hamna, how are you after a very long time?
Yeah, I'm fine. How are you?
Yes, Alhamdulillah, I'm good as well. So, how was the exams?
They've been pretty good, but I don't know when my result is.
Yeah, I think the paper has been cancelled, na? In your
For what?
country as well.
No, no, I live in Saudi Arabia. It's not cancelled here.
Saudi Arabia, okay. I think that I have heard that in the Saudi as well, the papers are going to cancel, but I'm not sure.
No, no, they're not cancelled here. I
Do
also
you
just
want it?
had my English speaking exam on Friday. I just gave one of my external.
Okay. Do you want that it should cancel?
I mean,
Because
I don't mind it.
most of my students, they are like praying for that the exam should cancel.
I mean, I
They are
won't
praying for
mind it.
it. Okay. No, actually, the students who really you can say put a lot of efforts, and they have been doing it for so long, so they don't want to that their paper should cancel.
Yeah, but still,
Okay.
it would be like easier if it gets cancelled. You know what I mean? 'Cause I'll be free before.
But if you will free before, so but what is the use of it? Definitely the time will pass, and
Now I
uh,
will study for AS and 11 and 12th grade.
okay, you will study from for the AS after that.
Yeah.
Yeah, because in May June 2027 you will be appearing for the AS, no? That's why.
Yes.
Okay, so as you can see, this is very old paper. This is 2005 and October, November, and it is like this paper. I'd say that it will help you to clarify different basic concepts, because as you can see that they have asked very small question in question number one. But yes, some of the paper like after 2005, you can say 2010, 11, 12, these papers are, I would say, that quite difficult, like some of the questions but not all. But before that,
Okay.
these persons will be like helping you to clarify the basic concepts of accounting. So as you can see that we have the first question. They are asking that in which book of prime entry. I think I have to. Okay, one second. Just give me 2 minutes. I need to connect my writing pad with this. Okay. So the very first question is that in which book of prime entry would a check received from a customer recorded? Okay. So it is too easy. We know that every cash transaction, we know that the cash book, this is one of the ledger, and this is prime book as well. And we know that what is the meaning of prime book. There's a slight difference between prime book and the ledger. Prime book is the book where we will record the transactions initially with the help of source documents. And then we will take the total of these prime books and we will take this to the ledger. But here they are saying that book of originality, and we know that the cash book, even if they would ask about the ledger or the prime book, if this is the cash transaction, so it means that we will record this into the cash book. Then the next question is a state what is meant by the trade discount. Okay, so it just simply needs to state. So trade discount, we know this is the you can say that the price allowed for bulk purchase or to a regular customer. A reduction in price.
Okay.
So reduction in price allowed for bulk purchase. Then we have the C part, that in which section of the balance sheet would the trade creditors appear. Okay, these are a trade creditor. It means it's a trade payables. They want to say the trade payables, but this is the old terminology. So trade creditors, we know this is a part of our current liability, and in the balance sheet means it is a statement of financial position. This is a new name, but the old name was balance sheet. So we will write these trade creditors means our trade payables in the current liability section.
Okay.
Then we have D part, that in which system of the petty cash does the cashier make up the balance to a fixed amount each month. It means that each month, they have to pay the fixed amount. So that is basically the impress system, where the main cashier will be paying a fixed amount every month to the petty cashier.
Okay.
Okay, so impress system. The next one is the stock is valued at the lower cost and the NRV. Okay, what is the meant by NRV? What is the meaning of net realizable value? So this is basically the net amount for which the stock may be sold. If you'll not be able to understand any questions, so you can ask the net
Okay.
amount for which the stock may be sold. Then we have F part, that to which final accounts are the totals on the following accounts transferred. Okay, carriage inwards. Okay, so carriage inward means that the delivery cost which we have paid to purchase the raw material. So this is what we will record in the trading section.
Yeah.
And carriage outwards, we will assume this is a kind of expense for the company, because these are the delivery costs which you to pay to deliver the products to the customer. So that's why this will be the part of profit and loss account.
Won't it be an
Okay,
expense in the income
then
statement?
we have next.
I have a question. Hello?
Okay, this practice is really good to know that what is the
Wait, wait,
capital
wait.
expenditure and capital revenue,
Can you
because
hear me
these
properly?
questions are really popular in the P1. And whenever you are going to charge depreciation, so at that time too, you should know, because they usually give these you can say errors in the depreciation question as well. So they'll tell you that, okay,
Wait, can you hear me now? Hello? Hello?
I can't hear you.
Now can you hear
Hello.
me?
1 second, let me just join the meeting again. Hello.
Yes.
Hamna, if you wanted to ask any question, so you can simply send me the message here. Like, we have the message option.
Okay, yeah. So I wanted to ask
You
about
can
the
raise
carriage
your hand
outwards.
like this. You can raise your hand, and if you want to, like, send message. So you can raise your hand and you can send a message here like this, because
Okay.
I need to solve this question. So that's why you just need to hear.
Okay, wait, but I have a
Let me
question.
lower this hand. Yeah, okay, search lower. You want if you want to ask something, so you can send the message. Can you just write okay if you can hear me? Ah, okay. Okay. So then we have the next person, that purchase of motor van. Okay, so it's too easy. We know that this is the purchase of motor van. This is the expenditure on the fixed asset. So that's why this is the capital expenditure. New tires for the motor
Wait,
van,
I
new
sent a message
tires.
in
This is the
the
revenue expenditure because
group.
this is the expense which is recurring in nature. Maybe we have to purchase these tires multiple times in a year. Then painting business name on the motor van. So this is capital expenditure because this is the thing which is going to happen first time. So this is the capital expenditure. Cost of oil for motor van engine. So it is too easy. This oil we have to purchase again and again. This is recurring in nature. So that's why this is the revenue expenditure. Then we have this age part, that for the year ended 31st August 2005, Sayed made, okay, Sayed made gross profit of this and expense of this. The balance on his capital account 2005 was this. What is the Sayed's return on capital employed for the year ended? Show you're working, okay? So to find out the ROCE, return on capital employed, the um, formula is that profit, which is the balance on his capital account, is, I think this is maybe, mm, this is this is the GP, okay, 45,000, and this is the expense. Okay, so first of all, we need to find out the net profit, means that profit for the year. So how we can do that? GP minus expenses. So GP is 45,000, as you can see, and the expenses is 30,000. So the profit is 15,000. So the formula for the ROCE is net profit divided by capital employed. So this is 15,000 divided by, this is, I guess, 1,50,000. And then we will multiply this with 100. Yes, what's the answer? Let me find it.
Okay.
Okay, so this is 10%. Then next question is, insert the missing word in the following statement. Working capital is defined. Okay, this is basically the simple definition. Working capital is defined as dash assets less dash liability. Okay, current assets less current liability. Then we have this question number 2. This is basically, um, uh, this is like they're saying Peter Berg is in business and buys goods from the general supply company, and he uh, dash the following invoice from them. Okay, so this is the invoice. Journal supply company sale invoice. Okay, so here the name is written, and then the date, and then the quantity of these goods, the name of goods, their unit price, and their total price. What we need to do, we need to find out this and this. So basically this is we need to find out the total price. This is the unit price and this is the total quantity. So it means that when we will multiply this 1000 with the 0.10, so we will get the total price for the 1000 number of gromets. So 0.10 multiply by 1000, multiply by 1000, yes. So this is equal to 100. dollar. And then we have to find out the third. So it is too easy. We will add this 1200 with this 100, so it will become 1300. And we need to find out this as well. They are saying that okay, this as well. Okay, the quantity. So basically, we need to find out the quantity. We have the unit price and we have the total price of the dash quantity. So we know that if we will multiply the quantity with the price, so we will find the total price. Okay. Since we want to find out the quantity, so what we will do, we will divide the total price with the 0.40, means that the unit price. So how much we will get? One second, let me find it. This is 3000. So it means that the quantity is 3000 of the bolt fastenings. Then we have to find out this fourth one. They're saying term, the term written that 3% of dash for payment within 14 days of invoice. 3% of cash discount basically they are saying, because on the sale invoice we used to write the terms about the cash discount. So it means that we will simply write the cash discount here. Okay. Then we have the next person, they're saying on the lines below, write the missing words or figures from the invoice. Okay. So let's do it. The missing figures. The first one means this one. What is the missing figure from here? Okay. Okay. So we need to write this thing. Okay. 3000. And on the second one, this is 100. And then on the third one, this is 300. And then the fourth one is this cash. So it is thing. Now the next person is that Peter had previously bought goods for $2,500 from a general supply company 28 August, and this amount was unpaid at 31st August, at the year end, month end or whatever. Peter paid this amount on 5 September, and he did not pay the September invoice until 30th October. An extract from the payment side of the Peter's cash book is shown below. Okay. So what we have to do here, first of all, on the 5th September, the journal supply company, how much the discount they have received. Okay, so how much they have paid? They had purchased 2500 worth of goods, and then he paid this amount on 5th September. Okay, so 2500. And how much discount they were receiving? 3%. We saw from the invoice. 2500 multiplied 3 divided by, okay, so this is 75. Okay. This is 75. So we just simply need to write this thing here. Then in the second one, we have to write that how much amount they will write in the bank account. So it means the remaining amount. So what you will do, 2500 minus 75, this discount. So this will become 2425. Then in the third thing, we have to write that how much discount they received on 30th October. So since they have not paid yet the September payment, so that's why there is nothing. And in the fourth means that this one, how much we will transfer in the bank. Okay, so as you can see that Peter paid he did not pay the an extract from the Peter cash book. Okay, let me see from above how much payment we have to write here on 30th October. Yes, it's 1300 because this is the amount which they need to pay in the month of October. October, September. Let me see the month again. Yes, October. There's no discount because they haven't paid this on time. Then we have the next question C. From the information A and B show the entries in the General Supply Company's account in Petersburg purchase ledger for the month of September and October. Okay. So basically, this is a kind of credit liability for them. So let's make the account here. Balance BD will be here. The date will be 1st September. And when they will purchase something, so it will increase liability. So that's why this will be here. Whenever they will pay the amount, so we will record the bank entry here. And whenever they will receive discount, so it means that their liability decrease. So this will also be on the debit side. Okay, so this is basically for the month of September. So as you can see that they are owing 2500 because they have previously bought these goods on 28 August. So definitely this balance will come in August because they are saying that you have to prepare account for September and October both. So it means that the balance BD will be 2500. Then in the month of September, they have purchased the goods for 1300 in the month of October. And how much they have paid? So as you can see that they have paid this amount 2425. So we will write it here. Discount which they received, that was 75. So this is the for the September. You need to write the dates as well. Then we need to balance this for the month of September. Let me just write it down. Okay. So this 2500 and this 1300, this will become 3800. It's too easy. Then minus these two. So this will become 1300. And this will become the opening balance. In October, 1300. And they have paid this amount and they did not receive anything like the discount. So now there is nothing in the account. There is no closing balance, nothing like that. Okay. Then Smith has a business selling washing machines. He buys the goods from the manufacturing and sells them to store and other suppliers. He keeps full accounting records and his trial balance is shown below. Okay. First of all, we have the advertising. Okay, let's discuss about the additional information. Stock at 30th June 2005 was valued at 7100. Basically, they are talking about the closing inventory. Motor expenses of 350 are to be accrued. It means that we haven't paid the expenses for the motor. This is accrued at the end of the year. So yeah, these are the motor expenses 860. So we will simply add this 350 here because this is accrued at the end of the year. Depreciation of 700 for the year is to be charged. Okay, so we don't need to do anything. We don't need to find out this depreciation because they have already provided the depreciation, that is 700. So this will be the part of expense. Purchase invoice of 4000 have not been included, but the goods are included in the closing stock valuation. Okay, so what does it mean? It means that this 4000 they have recorded in the closing stock, means this one, but this purchase invoice they haven't include this into the goods. So as you can see that these are the purchases. Where are the purchases? Yeah, these are the purchases. You simply need to include the 4,000 here because previously you did not record. And I think there is not other um, in yeah, there is nothing like that. So first of all, what we will do, we will write the revenue. So where is revenue, 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 where is revenue? Rent, lighting, insurance, drawings, letters. Okay. So basically the sales. Okay. So maybe they use a sale. Yeah, this one. Yeah. First of all, you write the sales, then the opening stock. Opening stock is this. This is the year start date. So this is the opening stock, which is 8,400. Then purchases, which is this. There is an adjustment. Then we will deduct deduct the closing stock, which is 7,100, and there is carriage inward as well. So we need to add this 700. This is the part of cost of sale. And after that, we'll get the gross profit. So advertising is a part of expense. Uh, Depreciation is a part of expense. And then, okay, we will not record this one. We will record this one. And this is the current year's depreciation. This is the previous year depreciation. Then general expenses, insurance, lighting, heating, motor expenses, office expenses, rent, postage, stationery, and varied and salary. So all these are the part of expenses. So we will deduct the expense from GP and we will get the net profit. Then they are saying that calculate to two decimal places the Smith's gross profit percentage for the year. Year. Okay. So this is like what we will do. We will use one formula, that is GP over sales multiply 100. It's too simple. You will calculate the GP from above and divide this with the sale and multiply with the 100. So you get the answer. Calculate the two decimal places Smith's net profit percentage for the year. Show your working. So what does it mean that whatever the sales they have made, what is the profit percentage into that? So the formula is net profit, means that profit for the year divided by sales multiplied by 100. So net profit you'll get from the income statement, sales you already have, and then multiply with the 100. Next question is that John's has a similar business and his GP percentage is higher than the Smith's. So there's two reasons for this difference. Okay. So remember that maybe his GP percentage is higher because maybe he is charging higher price for his gold, possibly because maybe they are in high demand. So first of all, we can say that John's may charge higher price for his goods. Okay, possibly because they are in high demand. Second reason that why their GP margin is high, because maybe Johns can buy his goods more cheaply. Okay. Next question is that question number 4. What is the reason for charging depreciation on the capital expenditure in the cash profit? Okay, profit and loss account. Okay, so it's too easy. Basically, to charge the cost of capital expenditure to profit earned over the useful life of asset, because we want to see that whatever the revenue we have made is just because it was possible because of the non-current asset which we have used throughout the year. Because if the non-current asset were not there, so we'll not be able to make the sales. So that's why we have to show that okay, this is the depreciation, this is the amount which they have lose throughout the year just to make the revenue. So we have to show this as an expense so that we can match it. So this is the reason to charge um, the cost of the capital expenditure to profits, means that income statement, over the useful life, profit and sorry, in the income statement, profit and uh, over the useful life. Okay. Then we have the next question. It's relevant to the depreciation. It's good. And Koala bought a printing press on 1st October 24. Okay. For this is the cost of machinery. She is preparing the final account for the year ended 30th September 2005 and needs to decide which method of depreciation should be used. So basically, this is the year end and this is the year start. Okay. Then which method? Okay, so she needs to decide that which method she should use. So she expect the printing press to have a useful life of 10 years and to be able to sell it at the end of the time, which is 4,000. Okay, so this is basically the residual value, means that after completing its, you can say that the useful life, for how much we can sell, for how much amount we can sell it. So this is known as basically its residual value. So by looking at this information means that we can use the SLM. Using this information, she could use the SLM or the RBM method at 20%. So we need to find out the depreciation for these 3 years, but with the two different methods. So it is too easy. For the straight line method, what we will do, cost, we will use a formula, residual value divided by useful life. So the cost was 40,000 minus the residual value is 4,000. Year is useful life is 10 years. Let me see. 40,000 minus 4,000, this is equal to definitely 36. 36,000 divided by 10. So 3,600. So we know that in the straight line method, the depreciation amount will be constant for each year. So that's why we don't need to do anything. Just simply write like this. Okay. But for the RBM for 2005, we know that in the reducing balance method at the start of the year, we will multiply the depreciation rate with the cost. So cost is 40,000, multiplied depreciation rate is 20%. So for the first year, this is 40,000 multiplied 20 divided by 100. This is equal to 8,000. So this is the depreciation for 2005. Then in 2006, we know that from the second year onwards, we will be applying this depreciation rate on the net book value. So it means that how we can find our NBV is equal to cost minus AD. AD means total depreciation. So cost is same 40,000 minus AD is now 8,000. So this will become 36 and then sorry, this will become 32. 32,000 is the net book value multiplied with 20%. So this is giving me the 6,400 answer. So what does it mean? It means that 6,400 is the depreciation for the 2006. Now again for 2007, we will multiply this 20% with the NBV. So now to find out the NBV, what is the total depreciation now? It is 8,000 plus 6,400 both, because this is basically known as your AD. So this is like 6 and 6, 12 and 2. This will become 14. So 14,400. And this will become One second. This is 40,000 minus 144,000. This is 25,600. So this is the LBV. This is not the depreciation. Now we will multiply this with the depreciation amount. 20 divided by 100. One second. 25600 multiply 20 divided by 100. Okay, this is equal to 5120. So 5120 is the depreciation for 2007. Okay. Uh, Now let's see the next. We will prepare a provision for depreciation account. Okay, so it is too easy. We have to prepare this for the 2005, 6, and 7. It is too easy. What we will do, like for example, if we are making account for 2005, okay, 30th September. So we will simply transfer the depreciation, okay, method, Collar decide reducing balance method. Okay, so as you can see that in 2005 that was 8,000. So we will simply write 8,000 here. So what is happening? We know that the provision account, this it has a credit nature. So whenever we charge depreciation, so we will credit this, and whenever we depreciation will decrease, so we will debit this. And in the provision account, we will be charging the yearly depreciation, and we will transfer this into the profit and loss statement, and the profit and loss statement will be debit because depreciation is one of the expense. So now there is nothing here, so you will simply 8,000. You need to write the date as well, like September. Now there is nothing. Balance CD ending year date was 30th September. This is a 8,000. Then again, same thing in 2006. 30th September at the end of the year. Okay, one second. We have to write the balance BD first of all. That is 8,000. This one. Now this year we have charged the depreciation which is 6,400. So we will simply write 30th September here. Income statement here. 6,400. Then again we will add these two. This will become 14,400. This is the year-end balance. And we will transfer this here. This is now 2007. That's and this is how it will be like going on. Like now we need to simply just write the depreciation in 2007 account. Then we have this question. They are saying that Anvil has prepared the following TB for the year 31st August 2005. So we have these amounts. We need to prepare the balance sheet, means that statement of financial position. It is too easy. First of all, as you can see, we have the fixed assets, meaning non-current, plant and equipment, motor cars, and then we have its provision. So we will write the depreciation and we will minus the depreciation from the cost. So we will get the NPV, which you need to write. Then we have the current assets. In the current assets, we have the stock, we have the debtors, we have bank in cash, we prepayments. Yeah, because prepayments meaning that we have paid the advance expense. So this is also the part of it. Then the same thing, we will reduce the current liabilities, and then we will write the non-current liability, then capital plus net profit minus drawings. So this is the same thing, you know. Calculate two ratios, two decimal places. Okay, current ratio and quick ratio. The formula is very simple. For the current ratio, we will add the bank, debtor, prepayment, and stock, and divide this with the current liability, that will be accruals and creditors, which we saw above. For the quick ratio, we will not add the stock, but the other current assets, and divide this with the current liability. So we'll get the answer. Yeah, that's it. So now you need to solve those questions which I did not solve in the class. I will solve means that you are going to end the session.